Welcome. You're viewing the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for January 31st, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.55 rose from 0.38 last week and continues in very bearish territory. The total count of securities in bullish or bearish patterns fell 4% to 3,251. The count of bearish stocks decreased 15%, while the count of stocks in bullish patterns increased 24%. The Pirls P&F Market Breadth Summary Chart shows us a market now 34 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe free of charge to the Pirls Stock Market Commentary via email, simply enter your email address in the provided space. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 11 points for the 13th advance in 22 weeks. At a negative 965.88 points, it continues below all 7 tops above plus 100 and below all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum. The CCI 20 daily at minus 26.45 is now within the plus or minus 50 range and could generate a valid zero-line reject short entry signal if the CCI 20 daily declines sharply next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 9 weeks ago, while the daily CCI 20 began a Woody's downtrend 6 weeks ago. The CCI 20 weekly now has 4 consecutive weeks below zero and continues outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 3 of the bottom 5 industries are negative. Bullish, disk drives has left the bottom 5. Bearish, brokers and KBW Bank continue in the bottom 5. Networkers has entered the bottom 5. Oil services has entered the top 5. Comp tech and computer hardware have left the top 5. Gold and silver has entered the top 5. Focus this week from www.davidstockmanscontracorner.com. The gigantic Chinese banking system is rotten to the core by Zero Hedge. The following are some key points. China is one chaotic default away from collapsing into the post-Minsky moment singularity, where it can no longer roll over its bad debt, leading to a debt supernova and full financial collapse. In China, in dollar terms, their banking system is almost $35 trillion against a GDP of $10, and their banking system has grown 400% in 8 years, with non-performing loans being non-existent. So what we are going to see next is a credit cycle. And in a credit cycle, you see some losses. But if China's banking system loses 10%, you are going to see them lose $3.5 trillion. Friday's adoption of NIRP by Japan, which sent the US dollar soaring, has only made any upcoming future Chinese devaluation even more likely. But whether China devalued or not, one thing is certain. It is next to impossible for China, under the current socioeconomic and financial regime, to stop the relentless growth in NPLs, non-performing loans, which even by conservative estimates in the trillions, accounting for at least 10% of China's GDP. But the main reason why China is now trapped, and on one hand is desperate to stabilize its economy and stop growing its leverage at nosebleed levels, while on the other hand it is under pressure to issue more loans, while at the same time it is unwilling to write off bad loans, can be found in the following very simple explanation offered by Mr. Zhu, a junior banker at a Chinese commercial bank. If I don't issue more loans, then my salary isn't enough to repay the mortgage and car loan. It's not difficult to issue more loans, but let's say in a year's time when the loan is due, if the borrower defaults, then I won't see a pay cut. I'll be fired and still be responsible for loan recovery. That explains why China's ruling elite will never be able to achieve an internal devaluation, and why it will have no choice but to pursue an external devaluation of its economy by way of devaluing its currency, presumably sometime before its foreign reserves run out, which at $185 billion a month burn rate may not last for even 1 year. However, before it does, it will make sure that it also crushes every yuan short, doing precisely what the Fed has done with equity shorts in the US over the past 7 years. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and wishing you true success.